It's great to see us all. And as was mentioned, I'm Estelle Jacqueline Asari. I'm in digital and innovation for over 15 years, and I'm excited to moderate this panel. I've observed firsthand how innovation and regulation always clash, and sometimes positively and sometimes not so positively when managing agility. So it gives me great pleasure today to moderate a panel of such brilliant minds to discuss the topic Regulation Unplugged, striking the right balance between innovation and oversight. So I'd like our panel to introduce themselves and then we would get started. So I'll start with Chiraag.
Hi, hi everyone, I'm Chiraag Daya. So as the lady introduced me, I'm working at Analytix Engine based in Johannesburg, South Africa. So I have an extensive experience in credit modeling, and I'm approaching today's topic from that lens and giving a perspective on how regulation impacts modeling.
Excellent, thank you, Chiraag. Then we have Clement.
Hello. Okay, so my name is Clement Yayra Tettey with PwC Ghana. I'm with the technology and consulting team, majoring in cybersecurity. So that's where I'll be looking with this conversation.
Excellent. I love the diversity. So Kudzai, I love your name. Please, go ahead.
Thank you so much. Kudzai Chaka. I'm the CEO of KC Compliance. We're based in Johannesburg. And what our firm does is help and support businesses who are operating across the African landscape to comply with regulations, which everyone knows the landscape itself is quite complex. So it's about providing that bigger picture and that understanding so that they can identify and better manage their risks. We're very much Africa focused and passionate about business in Africa and fintech and innovation in Africa. So it's great to be here just contributing to this conversation.
Thank you. And last but not the least, we have Chidozie. Chidozie asked me to call him Dozie, which I love. So Dozie.
Hi everyone. Thanks for being here today. My name is Chidozie Arinze. I lead government affairs for Visa across Western and Central Africa. In my role, I engage with regulators to shape the regulatory environment and also foster the growth of the payment ecosystem that we operate in.
Thank you so much. And we will dive right into it. So my first question would go to Dozie and Chiraag. Okay. How can regulators encourage disruptive innovation in fintech and digital while still ensuring that consumers are protected and the systems are stable?
Cool, I think I'll start. So I think what makes innovation difficult is there's always that regulatory burden that exists to protect the customer. And I think what regulators need to do is to strike that balance by being enablers and not just enforcers. So they need to create clear principle-based rules and sandboxes to let innovation be treated safely and tested. And I think if you have that open dialogue with fintechs between the regulators and that trust and transparency set up, you can protect the consumers while not stifling innovation.
That's a valid point. Dozie, any thoughts on the same?
Yes, I'll pick up from where Chiraag stopped. There's always that, imperative for regulators to prioritize the safety and, protection of customers. But, in many countries, and I cover 23 countries across Western and Central Africa, there's always a part of the regulatory mandate that I think regulators either don't, you find they don't prioritize that part a lot, which is the growth, which is to foster and enable the growth of the sector that you're meant to regulate. If there's no sector, you would have nothing to regulate. So I think that it's an existential matter for regulators to ensure that they can protect the industry as well and drive innovation. And one of the ways that I'd say basically is regulatory certainty. We need to have clear rules. We need to have rules that don't require you to call the regulator. I need to be able to go online and say this service is allowed in this country. Innovators need to know that what they're working on is not in conflict with existing regulation. So clear rules matter. There's also a need to allow, to keep pace with innovation. Of course, globally, innovation always outpaces regulation, but regulation can't be too far behind. Otherwise, it will become a drag.
Yeah, absolutely. And I think I agree with you. Most regulators focus on protection instead of growth. And to the point you made, without the industry, there's nothing to regulate. And so we do need our regulators to kind of spearhead innovation growth, absolutely. Clement, I think this just kind of dovetails into your question around the view that tech companies should also plan compliance and best practice from day one, right? Startups typically would run first with the product and then look back to see, hey, what's going on with the compliance. So irrespective of the absence of oversight in markets that they operate, what are your thoughts around how tech companies should plan for compliance and best practice? And what kind of best practices should they have in place as founders of tech and similar industries at the early stages?
Oh, okay. Okay, so with regards to that, I think most tech, as you rightly said, most tech entrepreneurs actually go head in first with the products and services and systems before they even think about protecting and putting safeguards to those services that they are providing. However, to come forward with it, I think what I would say is with the first things that they have to put in place are with regards to data governance and data structures, with regards to, and also putting in place data privacy controls, building privacy first or privacy by design first into their products and services as well. Also, another thing that they also need to put in place is with regards to cybersecurity. They need to make sure that all these services are compliant or have just basic controls or the basic controls of multiple factor authentication, encryption, and also some vulnerability assessment to be carried out before they actually hit the ground running. Thank you.
Thank you. It's so funny how you said vulnerability assessment, because in the banking industry, when we are integrating with startups and we have to we ask them for their vulnerability assessment report, it's like it doesn't exist, right? And then one of the big things that you are open to is third-party risk, because you don't have the startups protected. And that is really, something that we have to keep in mind. So that is really solid advice. 100% agree with you. And, but nonetheless, we do understand that companies are not all in the same maturity phase, right? And that will take me to adaptive regulation. So I'll take this to Kudzai and then also to you again, Clement. In Africa, we do have organizations at different stages of maturity and growth. So in your opinion, Kudzai, what regulatory innovation models have proven to be effective in balancing innovation and oversight? And how can they be adapted in the African context?
Thank you for that. And I think the truth of the matter is if all regulators everywhere are still trying to create that balance, it is very difficult to achieve because, as has been mentioned, they have a mandate that they have to fulfill. And, consumer protection, financial inclusion, market stability, all of those type of things. So they have to really be thinking about, how do we make policy and encourage innovation while also making sure we're achieving the mandate that has been given to us. So it's a balance that still trying to be achieved, but it is possible. And I think we have to also recognize that you can't have laws that are designed for specific cases. You know, it's very hard to achieve that. Otherwise, you'd have 3,000-page legislations for every crypto, every forex, every whatnot. So the approach has to be one that recognizes that businesses are different. They have different risk levels and have different types of risk that they're dealing with. And the regulators themselves have to then have an approach of, although the laws might be consistent for everybody because it is a market and you can't customize it, their approach from an oversight perspective recognizes that this is a small fintech, this is a large traditional bank, and they apply according to that. So things like you're saying tiered licensing, where it's like I can't expect capital adequacy requirements that are applied to banks to be applied to small entities. So recognizing those distinctions. I can't expect small fintech startups to have massive compliance departments in the same way banks have. So as long as there's that kind of approach of recognizing the distinctions between each business and how they operate and the risks that they are exposed to, the laws themselves necessarily don't have to cover it, but it's the regulatory approach on a day-to-day operational level that needs to be recognizing those things.
Absolutely. I 100% agree with you. The laws don't have to be multiple, but the approach has to be adaptive. Clement, what are your views on the same?
So looking at the operational side of regulation, I think most regulators currently are also encouraging or breaking the balance by providing sandboxes to these startups, and as well as also providing some form of advice. So as she rightly said, based on the kind of market that you are serving, that will also actually help with the advice that these regulators would actually provide for you as well. The same way with the sandboxes, if they are providing an oversight of what services or what products that you are offering, they can actually advise you more adequately than rather just being a blanket statement of, say, you need to do this, you need to have a compliance team in place, you need to do your risk assessment. Based on your organization, then they can provide you with adequate advice on that.
I mean, that's fair. Thank you. Chiraag, I think there is one issue around the compliance burden that Clement just alluded to. You can't expect just a small company to have a whole compliance team and so on. So how do financial institutions and firms balance the compliance burden of regulation versus innovating by using new technologies? And what practice do you see in your industry as Analytix?
Cool, thanks, Estelle. So what I think I've seen in industry is that the best tech companies are the ones that treat regulation as a foundation and not just a hurdle. And so I think another way of thinking about it is if we think back to like high school, and you had that strict teacher that you never got along with, but at the end of the day, that teacher was actually trying to get the best out of you, or trying to help you. And I think that's the mindset shift we need to do, or most companies need to do, and see the regulator as that teacher, is there to aid and not to hinder. So I think the best companies, they end up building the reg tech tools and automation into their processes. And they involve the compliance teams from the start, so that the innovation can be built into the process and not bolted on later. And I think in that way, you can keep driving innovation without being shackled by regulation stopping it later. And I think another piece where the best pieces I've seen is a hybrid approach whereby the heavily regulated models, not to just use a fully innovative solution through it like AI, but rather use AI as your supplemental tool to bolster your more traditional methods. So that's another way to really drive innovation that is still going to be regulation proof, or the regulators will be happy with those models. And I think also there's, in my space in particular, there's certain sectors where the regulation isn't as stringent, somewhat like fraud detection and fraud modeling. And I think that's where you can really drive innovation, because you can use innovative solutions there and not be hindered by the regulator. But I think, to sum it up, the main thing that most companies need to do is work with their compliance teams to make sure that they are compliant with the regulations, and also not treat the regulations as this massive hurdle that you crash into, but rather see it as that foundation on which you can build.
Make the regulation your friend.
Yeah, 100%.
Right. Yeah, you just reminded me of a project we were doing in the bank in AI, and I remember the first thing that the team in Joburg said was, oh, you need to have your compliance team as part of the innovation team, or you have to have the fraud team and all of that. It's like they have to co-create with you, because if they don't have it at the foundation, you're going to meet them way down the line, right? And that's going to block you. So yeah, I totally agree. And moving into cross-border challenges, this will come to you, Chidotse or Dozie and Clement, right? Africa is now the largest trading bloc in the planet, and yet not trading with itself fully. With digital services and capital flowing across borders, how can regulators harmonize these frameworks to support regional integration without stifling local ecosystems? It's a loaded question, but I think, Dozie, you have the shoulders to carry it. So I'll go to you first.
Thank you. You're very kind. So I think one of the big issues that we see as Visa is that payments, the ability to pay and be paid across borders, remains a challenge in Africa. I mean, we could talk about travel, right? It's a nightmare for most. Same with payments. It's still quite challenging. I know, there's a lot of work going on to try and ease those. Visa does have solutions, but, what we see is that the technology is there. It's sort of the regulation that needs to catch up. Making a payment from Nigeria to Ghana, for instance, is not difficult. There are people in this room that can solve for this and that might be solving for this already. So it's regulation that needs to catch up. And one of the ways that we need to do that is to harmonize regulatory requirements across borders. Ghana is a good example of, a regulator that is trying, the Bank of Ghana is trying to do that. There's this regulatory harmonization project that is going on with Singapore, for instance. I think we need to do more of that on the continent. What I'll say is, and I was thinking as you were talking about this, it's a question that comes up a lot, in my line of work. And what we've seen is, it does appear that the attempt to solve this problem across a wider region is making it look so difficult. You want 20, 40 countries to harmonize regulations. It's quite tough. So let's start with bilateral harmonization. We know the corridors. We know that between Lagos and Accra, there's a lot of movement, goods, services, people. Let's harmonize that. By the time we have 50-something countries in Africa, right? If the bilateral arrangements, with each of those countries, suddenly you have fewer countries to deal with. And then within those harmonized arrangements, those bilateral arrangements, we can then see which further bilateral arrangements we can have. So it's a recommendation. I think that, I know that Ghana and Singapore are talking about the fintech passport, for instance. It's important. When I fly into this country, my Nigerian passport is accepted as a means of identification. For payments, it should be the same thing. This information can be exchanged. It can be moved across borders to ease payments. That, for me, is a crucial step in trying to promote intra-African trade, harmonizing regulations so that payments can move more seamlessly across borders.
Yeah, absolutely. And I can't count the number of Instagram products moving between Nigeria and Ghana, and people struggling to find out how they can send Naira across and all of that. Why start with all the 55 when you can start with 2, go to 3 and 4? Clement, let's hear your thoughts around the same.
I totally agree with Chinedi with regards to segmenting the whole regulatory requirements for interoperability. So the same way we can actually start with ECOWAS, just do within West African countries. We actually don't have that. We're always trying to do it from the African level, which is actually taking a longer time because I think we looked at it, I think somewhere 5 years or 6 years back. Still hasn't happened, even with ECOWAS too, the same way. So I just think the same way, we just need to, the central banks actually needs to come together and find a common resolution around interoperability when it comes to moving money from one country to the other.
Okay. Anyone else have any thoughts on that? Okay. Then we would move into how we can collaborate, because the conversation really is around how we can collaborate, whether it's in trade, regulation, and so on, laws, and so on. So Kudzai and Dozie, this will come to you. What new forms of dialogue or partnerships between innovators, investors, and regulators are needed to build mutual trust and co-create smarter regulation? So Kudzai, I'll go to you first.
I'm going to focus on maybe collaboration on the regulator side. I'll leave the rest for you to talk to. And I think why I want to focus on that is because I think that's where one of the biggest challenges I hear consistently sits. You have multiple regulatory authorities that you need to engage with. There's a disconnect sometimes between one policy position from one regulatory authority to another, even internally in country, before you start talking about policy positions of one central bank to another if you've got cross-border activity going on. So I think we need more collaboration between regulatory entities to align as much as possible on policy position, so that you can know that if I am in Ghana or South Africa and I have this type of product, this is what I can expect from each of these regulators, and it's applied consistently. So I think we need more of that type of collaboration. What is our policy position when it comes to remittances, wallets, cryptocurrency, stablecoin, whatever the case may be? Let us all align on that, and also align on timelines, because I think that is one of the biggest things. And maybe they need to also be embracing technology to figure out how they can move things faster, because one regulator establishes a position, it's 6 years later, you're waiting for the second regulator to know what they want to do about the same thing, whether it's tax, whether it's exchange control, whatever the case may be. So I think for me, the biggest win will be collaboration amongst regulators and really streamlining their processes on policy positions, how they are approaching different topics, and then it almost like everything else will kind of, I think, flow very easily from that perspective.
Kudzai, 100%. And I think it's even more painful for innovators that want to scale, because you can't tell what regulation exists in other countries beyond your country and at what stage you can do so on. That is so valid. Dozie, what are your additional points to that?
To say that I'm fully aligned with the comments around regulation. I think something that could be quite game-changing, at the very least, is we need more communities of practice, industry associations talking across borders. So we find that there's a lot of companies are talking to companies across borders. That's not such a new thing on our continent. But what we need is the FinTech Association in Ghana, for instance, should talk to the FinTech Association in Nigeria. What that does is, there's power in collective action. And when you approach regulators, what works is when you present things as a general problem as opposed to an operator-specific problem. And the associations have a broader view. They can see across all their members, and they can tell what the common themes are. Now, when that association in Ghana, for instance, talks to the association in South Africa, they are able to see where we can quickly win and where we can align quickly. So I think that, we need to come together in our countries and ensure that when we come together, we're talking across borders with similar associations in other countries.
absolutely. We need the regulators to talk to one another, and we need the innovators or the innovation communities to talk to one another across borders. So we're wrapping up. This has been an exciting and very educative session. And I would just give you one lightning question and you answer in 30 seconds. All right, so Siraj, I'll go to you first. If we reconvene here, AICC, in 2030, that's next 5 years, what headline would you want to read about in Ghana's fintech ecosystem?
Cool. Yeah, I'd like to see that Ghana has become the hub in Western Africa for fintech innovation, and this was driven by strong bonds between the regulators and the fintechs that builds consumer trust and drives innovation.
Ooh, well summarized. Okay, Clement, same for you.
So we have AFTA here now. So we're hoping that Ghana becomes the innovation hub also for fintechs and all other financial institutions.
Perfect. And I have one question for you, Kudzai and Dozie. For fill in the blanks, okay? For Africa to thrive in innovation, one policy or regulatory space change that would have a long-term impact is ... because ...
I think I kind of gave my answer away in the previous question. But one thing that I think would be a game changer is regulate this conversation about fragmented regulatory frameworks being a thing of the past. Because once you get that right, the innovation will flow from there. There's the certainty that we currently don't have. And when there's more certainty, there's more confidence to build.
Perfect.
I'd say, sorry, okay. I'd say, I mean, that was kind of going to be my answer.
Sorry.
Yeah, it was something else. So I'd like to see regulators, allow the industry play a greater role in shaping where regulation goes. And just, listening to the innovators, listening to the people who are, government doesn't exist, how do they say it? I don't want to mess this up now. But the regulator exists for the industry as opposed to it being the other way around. And I'd like to see that approach change across board, where the industry is playing a strong role in shaping regulation.
Thank you. Absolutely. Industry playing a strong role in regulation, regulators collaborating across borders, innovation communities collaborating across countries. Thank you so much. This has been an amazing experience with you all. And thank you, audience, for giving us your time. And we hope this has been insightful for everyone. Thank you.